So what are some of the chief mistakes that I see investors make in Asia? It reminds me of an old Benjamin Graham line about how the chief losses to investors don't come from paying too high a price for good quality stocks, but rather comes from the issuance of below average quality stocks, or poor quality stocks, during times of favorable business conditions. And we've certainly seen some stretches of favorable business conditions, whether it was an overall rising tide or whether it was a company that had a special relationship that allowed it to generate some extraordinary profits for a short period of time. And investing in those companies, in some of the much worse quality companies where they haven't been public for, in Hong Kong, I would say you generally want a company to have been public for a decade to really see how it'll treat its investors. And I hope that Hong Kong's getting better about this, but it seems like it's been awful slow to me. There've been a lot of corporate governance scandals here, worse than in almost any other global market I follow, that involve companies that have been able to do IPOs at opportune moments and that haven't run the business for the benefit of their shareholders. So I think if you're sitting far away and you're gonna use screens you're gonna use quantitative inputs to get ideas, that's a great place to start. But it's important to really know who's behind the company, and therefore what is behind who their customers are, and why they're providing an important value to their customers. Because at the end of the day, having a good business means that you're providing a great value to your customers. Otherwise, it's uneconomic what you're doing. And the easiest way to make a mistake in Asia is to invest in a business in China or somewhere else that has been allowed to make good profits for some period of time, but doesn't really have a business that creates extraordinary value.